Thank you. Thank you very much. Thank you. Thank you. Lady Mayor, Governor, ladies and gentlemen, my thanks to the Lady Mayor for her address and to the City of London Corporation for hosting us here this evening. I'd also like to thank the Financial Secretary, the Economic Secretary and the Chief Secretary to the Treasury for the work that they've put in towards my address this evening, and to the brilliant Gwyneth Nurse and her team at the Treasury for their tireless support. I have always been a firm believer that the success of our world-leading financial services sector is good for the whole of the United Kingdom. And I'm pleased to address you again this evening for the third time as your Chancellor. It was 2 years ago this month that this government was elected to office, and I was appointed Chancellor of the Exchequer. This evening, I want to take this opportunity to reflect on the past 2 years, on the choices that I have made, on Britain's economy today, and on the opportunities that I see ahead of us. I'm proud to report that the British economy is strong. At the start of this year, Britain had the fastest economic growth of any country in the G7. Last year, borrowing fell from 5.2% to 4.2% of GDP, its lowest level in 6 years. Investment is up, productivity is up, and wages are up too. NHS waiting lists are falling at the fastest rate in the past 17 years. And 500,000 children will be lifted out of poverty during the course of this Parliament. If I had said 2 years ago that this is where we would be today, many people would have doubted it. But we have proven the doubters wrong. Through strength, through resilience and through determination, Britain has beaten the odds once again. 2 years ago, I inherited an economy that had challenges on multiple fronts. A public finance challenge, spending over £100 billion a year on debt interest, while capital investment was cut in favour of short-term fixes. Projects promised, yet no money committed to deliver them. A public services challenge, school roofs crumbling, prisons overflowing, and hospital waiting lists skyrocketing. And an economic challenge, anemic economic growth, interest rates rising, and the cost of living crisis weighing on the everyday lives of ordinary people. Since the election, I have systematically addressed each of those challenges. In my first budget, I repaired the public finances, while setting out a path of fiscal consolidation to bring borrowing costs down. And at the same time, I made bold changes to the fiscal rules that meant I was able to invest an additional £120 billion in my spending review to restore public services and to build the housing, the energy and the transport infrastructure that is so critical for economic growth. At my second budget last year, I built on these strong foundations to bear down on the cost of living, cutting inflation by reducing energy bills, freezing prescription charges and freezing rail fares, and doubling our fiscal buffers to protect both household finances and the public finances from increasingly common economic shocks. The resumption of hostilities in the Middle East in the last few days has shown that our economic resilience will continue to be tested. And the market response to those changes shows that there is still work to do to ensure that our economy and our country is protected against a volatile global economic landscape. The action that I have taken so far has been underpinned by a new approach to building sustainable and resilient economic growth in every part of our country. An approach that I have called Securonomics, an investment-led growth model for Britain, where an active and strategic state steps up to make conscious and deliberate choices through stability in the public finances, investment in our infrastructure, and reform of our economy. This government has shown that change, indeed radical change, is possible. And the record of the last 2 years makes clear that governments can achieve that change only when they combine radicalism with credibility. I had to earn that credibility in opposition, and I have proven it in government, in every action that I have taken since I was appointed as Chancellor. That hard-won credibility must be sustained, and the foundations maintained if this work of radical change is to continue. In the past, radical governments without credibility have ultimately failed to win the trust necessary to deliver their agenda. And without radicalism, credible governments have found their credibility eroding when they're unable to satisfy the public's justified impatience for change. The most successful Labour governments have and must pursue the twin path of radical change and economic credibility. The work of change has begun, and I am proud that the decisions that I have made as Chancellor provide a platform for the next Prime Minister to take our country forward. I am optimistic about our country's potential, hugely optimistic. The economic future that is within our grasp. But that future is not an inevitability. It requires choices. That is why, in my second May's lecture earlier this year, I set out 3 big choices to go much bigger and much bolder in the areas which offer the greatest opportunities for Britain's growth, prosperity, and security. First, building growth in every part of our country, breaking with the failed idea that prosperity can be built from just a few narrow parts of Britain. Second, a concerted drive to make sure that the jobs, the industries and the innovation of the future are built here in Britain. And third, confronting head-on the damage done by Brexit by building much deeper ties with our largest and closest trading partner, the European Union. Britain should not be a country where opportunity and prosperity are confined to a few parts of our country, with other areas potential untapped, their talent, their resources wasted. This is a long-standing weakness in the British economy, and one where we are a clear outlier compared to our global counterparts. Since the election, we have taken a new approach, increasing investment in regions across Britain, and taking steps to unwind the old model, which hoarded too much power in London, with Whitehall taking a monopoly not only on where, but on how money is spent. To boost regional investment, I have reformed the Treasury's Green Book, our investment manual, so that every part of our country is given a fair hearing. And I have increased investment in city-region transport, supported development corporations in our 2 growth corridors, and allocated money to new place-based funds to boost defence, innovation and creative clusters in our regions and our nations. Yesterday, I met with mayors from across Britain. Their frustration is familiar to me from 16 years as a Member of Parliament in Leeds, of knowing the right priorities for your own area and not being empowered to deliver them. Here too, we have made progress. This government has done more to devolve power in the last 2 years than its predecessors did in the last 2 decades. Expanding integrated settlements so that more mayors receive a single multi-year funding pot with flexibility about deciding how the money should be spent. Introducing new city investment funds, giving regional leaders control over long-term, self-sustaining capital where returns can then be reinvested for future growth, and giving mayors the power to introduce an overnight visitor levy. But devolving real power means doing this at a much greater scale. And in my May's lecture, I set out the next major step, giving regional leaders control over a share of national taxes, including income tax and business rates. There is much further to go, but the steps I have taken put us on a path to a permanent transfer of power and resources away from central government towards long-term investment, local accountability and regional leadership to create growth in every part of our country. Our economy is most successful when an active and strategic state partners with business to innovate and to compete globally. That is a fundamental principle of Securonomics and of our industrial strategy. Not shying away from technological change, but stepping up and charting a path as our economy changes. And not allowing our industrial base to decay, leaving us exposed to volatile global supply chains, but instead recognising that economic security is national security. That is why we stepped in to save British steel and prevent Britain's steel capacity from being fundamentally undermined, so that our infrastructure, our industries and our security are not dependent on foreign imports. That is why we are backing our world-leading defence sector, so that as defence spending rises across the world, the benefits of that investment and those jobs will come here to Britain. And it's also why I've changed our procurement rules, so that government procurement is no longer a check for global incumbents, but a launchpad for British businesses, ensuring that we can buy British when it is critical to our national security, for steel, for shipbuilding, and now for AI. AI is the defining technology of our generation. It will be crucial to national security and to all our economic futures. I am clear that the role of the active and strategic state is not to step back from those challenges that this new technology presents, but instead it's to step up, embracing the opportunities of AI while guarding against the risks. That means having a serious plan on AI sovereignty, backing UK companies to win at critical positions in the AI stack, through our sovereign AI unit, through our advanced market commitment to quantum, and our AI hardware plan, and through our new AI Economics Institute, so that the jobs of the future are created here in Britain. Now, financial services is already at the cutting edge, a sector that is leading the way in embracing new technology and innovating to compete right across the globe. Today, I am publishing the recommendations of the Transatlantic Task Force on Markets of the Future that I launched with Secretary Scott Bessent last year. And I am publishing an update on our progress in the last year against the Financial Services Growth and Competitiveness Strategy, where I hope you all agree we have made good progress. We have one of the best stablecoin regimes in the world. The Great British Tokenised Deposit Initiative is now moving to pilot transactions. From today, UK businesses can access new AI payment tools, with MasterCard choosing the UK as the first place in Europe to launch new agentic payments. And I can announce that by early next year, the UK is set to become the first G7 country to issue a digital sovereign bond, with plans for future issuance to come. The success of the financial services sector is built on deep strengths in our economy, with world-leading universities, cutting-edge research capability, and one of the most vibrant startup ecosystems anywhere in the world. We must now go further to achieve the same success in other sectors of the economy, particularly supporting small and medium-sized businesses that are the backbone of local economies in every part of our country, and making the UK the best place in the world to start, to scale, and to stay. Since becoming Chancellor, I have reformed financial services regulation, setting out proposals for changes to ring-fencing rules. And last week, the Financial Policy Committee published the results of the review I requested on bank capital requirements, which is estimated to mean up to £150 billion of additional lending, with Nationwide alone committing an additional £40 billion in mortgages and to SMEs because of the changes that I have made. I am turning Britain's savers into investors through changes to ISAs and to financial advice. Last year, our largest pension funds invested an additional £10 billion into private markets because of the changes that I have made. And insurers are well on their way to delivering their £100 billion investment pledge, with £17 billion invested into UK assets to date. And I have boosted SME lending, including through the changes I announced yesterday in Gateshead, to help businesses grow, invest and create jobs. Launching a new UK export finance guarantee scheme to help small businesses to start exporting. And expanding the highly successful Growth Guarantee Scheme from the British Business Bank, more than doubling SME lending that it will support to £3.5 billion per year, and increasing the number of businesses supported from 8,000 to 20,000. Lloyds, NatWest and Alaka Bank have already confirmed that those changes will help them to provide £1 billion each of SME lending over the next 3 years. And I'm grateful to Paul Thwaite and to Charlie Nunn for driving forward this vital work. This is a crucial pillar of our growth strategy, backing British businesses to innovate, to export, to grow and to succeed. In the age of insecurity in which we live, the economic strength of our country will rest on strategic alliances. And no alliance is more important to us than our relationship with the European Union. Last week, I attended Eurogroup in Brussels, where I met with Commissioner Albuquerque, and I'm pleased to have John Berrigan from the Commission here tonight. I've always been clear about the damage that Brexit did to our economy. Britain's future is inescapably bound with that of Europe, our largest trading partner, with whom we share common interests and common values. We've already made significant progress. Participation in Horizon Europe is supporting the development of cutting-edge technology. We're set to rejoin the EU's Erasmus scheme from next year. And yesterday, the Prime Minister announced an agreement on the UK's participation in the EU's €90 billion loan to Ukraine, which will strengthen our defence links and our defence industrial base. I want to see the next UK-EU summit rescheduled as soon as possible, so that we can finalise ambitious agreements on agri-foods, emissions trading, electricity and a youth experience scheme. But I think we need to be much bolder and go much further, moving towards a trusted economic and security partnership where the default is that the UK is included, not excluded, recognising that in the majority of cases that will be the approach with the greatest benefits for Britain and for the EU. To achieve that, it will be incumbent on those of us who believe in Britain's relationship with Europe to make it happen, and to demonstrate the positive difference it will make to the British people. I'm grateful for the support for so many of you in this room for championing a policy of greater EU cooperation and integration. Reduced burdens for businesses, lower costs for consumers, greater opportunities for our young people, and a more resilient economy, with our energy systems, national security and supply chains buttressed against a volatile global landscape. The prize for Britain of a closer relationship with the EU is immense. I'm proud of what this government has achieved since the last general election. We have restored economic stability, putting our public finances on a secure path. We have invested in our public services and in economic growth, in transport, in nuclear, in housing. And we've reformed our economy so that it works better for working people. sweeping away our antiquated planning system and striking trade deals with countries around the world. The result is an economy that is stronger, with wages rising and child poverty falling. Through the choices I have made, I have fixed the foundations, and I have begun the work of building secure and sustainable growth in every part of our country, where an active and strategic state steps up to empower regional leaders, back British businesses, and deepen our relationships with the EU. Radical change is only possible if it comes with credibility. Radical change without credibility does not endure. And credibility cannot be sustained without delivering change that meets the moment. Radical change is only possible if it comes with credibility. That has been my mission as Chancellor of the Exchequer. That is the mission of this government, and I know it will remain the mission of the next. Thank you very much.
To the Governor of the Bank of England, Andrew Bailey.
Lady Mayor, Chancellor, ladies and gentlemen. Chancellor Rachel, thank you for those inspired words. I know how much we appreciate everything that you've done and continue to do. Now, I have to say at the start, as you said, Lady Mayor, it's really good to be on familiar ground. Last Saturday, I had to give the father of the bride speech at my daughter's wedding, and I was told I couldn't speak about the economy, I couldn't speak about monetary policy, financial stability. I think for good reason. So this evening I'm going to make up for it. No, seriously. Back in February, I made the mistake of remarking to a colleague that in terms of the global economy, things seem to be settling down, and of course this was a good thing to look forward to. Don't laugh, it's true. Here in the UK, inflation appeared to be moving back towards its target, 2.0%. We were entering a phase in which the main question for the Monetary Policy Committee then would be what level of interest rates would sustainably keep inflation there. Well, as often happens in economies, that judgment was rather short-lived. And soon afterwards, of course, the conflict in the Middle East introduced a new source of uncertainty into the global economy. Energy prices rose sharply before easing back, and inflation now will take longer to return to target. But the encouraging news is that much of the recent evidence remains consistent with the view that underlying inflationary pressures are moderating. But uncertainty does remain an important feature of the current environment, as we've been seeing only recently in the last few days. But we will do what is necessary to ensure inflation returns sustainably to target. That objective, of course, remains unchanged. But this evening, I want to step back from the immediate cyclical challenges and consider a longer-term question, really picking up on what the Chancellor's been talking about. How do we raise the growth potential of the UK economy further? And for me, two facts stand out. The UK has, for the last 15 years and more, experienced quite a prolonged period of what, by the previous standards, has been relatively weaker growth. And over that same period, we've been hit by a succession of major supply-side shocks. The global financial crisis, Brexit, the pandemic, the energy shock following Russia's invasion of Ukraine, and now the geopolitical tensions in the Middle East. And these events have shaped the environment in which businesses, households, and policymakers have to operate. And we have, over that period, seen a marked slowdown in productivity growth. For the financial crisis, the UK economy's potential growth rate was a bit above 2.5% a year. Since then, it's been a little bit more, but only a little bit more than half that pace. And that has been mainly caused by lower productivity growth. And that's not an abstract statistical thing. Lower productivity growth means lower growth in incomes and lower growth in living standards. It means fewer resources are available for households, businesses, and public services. So reversing this trend and continuing to reverse this trend must be a national priority. I strongly agree with the Chancellor on this and on what she has been doing. Macroeconomic stability is part of the answer, of course. Stable inflation and sound public finances create the conditions for investment and for planning. And long-run prosperity ultimately comes from the supply side of the economy, from innovation, investment, skills, competition, productivity. And that brings me to one aspect of that I'm going to devote the rest of my remarks to this evening, and that's the role of regulation. There's no shortage of commentary that regulation has become an obstacle to growth, and that is a serious concern. Poorly designed regulation, poorly operated regulation, can impede innovation. It can create unnecessary costs, it can discourage investment. But the conclusion I would draw that follows, it's not that regulation is inherently bad, it's that it needs to be designed and executed well. Because good regulation supports growth. It doesn't hinder it, it supports it. It should reduce market failures, strengthen competition, lower transaction costs, it should create confidence. It should enable firms and households to make long-term decisions with greater certainty. And it should therefore always be judged and set against positive objectives. And I think too often the debate sometimes gets trapped in a question of whether there should be more regulation or less regulation. I think that's really the right question. The real question is, what outcomes are we trying to achieve and how do we get them? And only when we've defined the objective can we determine the form of regulation that best helps to deliver it. So to illustrate this, I'm going to spend the rest of my time on three questions, on three areas that are relevant to growth, innovation, and regulation. Bank capital, payments, and artificial intelligence. So let me begin with bank capital and pick up where the Chancellor was saying. Debates about financial regulation often become debates about whether capital requirements are too high or too low. I don't think that's the right frame to have. The starting point is, what's the purpose of having capital? Well, banks occupy a unique position in our economy. They hold our deposits. They create credit. They sit at the center of the financial system. And for that system to function effectively, people must have confidence that their money is safe and that banks can continue to provide the financial services they need under stress if that occurs. And capital provides that confidence. It absorbs losses, it protects deposits, it supports the resilience of the banking system. A banking system without sufficient capital may appear effective in the short run, but history, and we've had it, demonstrates that instability ultimately imposes great costs on growth and prosperity. But that does not mean that every regulation we have is perfectly calibrated. It does not mean capital requirements should never change. Nor does it mean regulators should be unwilling to simplify rules where simplification serves the public interest. And as the Chancellor said, we've recently announced changes designed to remove anomalies in the capital framework and to improve its effectiveness, and that's a good thing. But it's done within a clear objective: maintaining financial stability while supporting sustainable growth. It's sometimes argued that reducing regulatory requirements will automatically release capital and increase lending. The reality is, in my view, more nuanced. A healthy, profitable banking sector attracts investment. Strong returns relative to the cost of capital support retained earnings, and that builds future lending capacity. Conversely, a weak and unstable regulatory environment can raise the cost of capital, reduce the willingness of investors to commit funds, and render banks unsustainable ultimately in the longer term. The quantity of bank capital is not fixed. It responds to incentives, profitability, and confidence. And this is why proportionate regulation can support growth rather than constrain it. And I would contend that the UK banking system today is resilient, competitive, and well-positioned to support households and businesses. And that is an asset for growth. So let me turn to payments. I suppose you have to be honest that payments don't always capture public attention. We all make them all the time, but we don't always sort of see them as the prime thing. But they are actually, of course, amongst the most important foundations of a modern economy. Every day, millions of transactions occur through a range of means, from physical cash to near-instant electronic payments. All payments, though, are underpinned by two things: trust, that money will retain its nominal value. The pound in my account is the same as the pound in your account, and that payments, once made, will stay made. They're final. These two principles, what economists tend to call the singleness of money and the finality of settlement, are essential to economic activity. We take them for granted. That's a good thing. But without them, confidence in commerce would rapidly deteriorate. So the challenge for public authorities is to preserve these foundations while enabling innovation. And that's important because we're currently witnessing profound changes in the technology of payments. Digital technologies are creating new possibilities for faster, more flexible, and more efficient ways of transferring value. They have the potential to reduce costs, lower fraud, improve international transactions, and support new business models. All of this is worth having. So at the Bank of England, we want to ensure the UK remains at the forefront of these developments. Last year, we completed a major renewal of our RTGS infrastructure, which will provide a platform capable of supporting future innovation. Through our digital securities sandbox, we're enabling experimentation with tokenized financial assets. We're working with the banking sector on the development of tokenized deposits and the next generation of payments infrastructure. We've also, as the Chancellor said, proposed a regulatory framework for systemic sterling stablecoins, one that preserves confidence while encouraging innovation. Now, I do appreciate that words like tokenization can sound highly technical and not tremendously appealing. But the underlying concept is straightforward, and it's really important. The technology behind it increasingly allows payments to become linked directly to the fulfillment of contractual obligations. In practical terms, it means transactions can become more efficient, more secure, and less vulnerable to delay or fraud. And that will support trade, it will support investment, it will support growth. And for businesses, and especially smaller businesses, that matters a lot. And the role of regulation is not to prevent these developments. It's to ensure they occur within a framework that preserves trust in money and confidence in the financial system. That's how innovation succeeds on a durable basis, something that Chris Woolard picked up in the report that he has published in the last day. So let me now turn to what may be the third thing, what may be the most important growth opportunity of all, as the Chancellor said, artificial intelligence. Throughout history, periods of exceptional economic progress have often been driven by what economists often call general-purpose technologies. These are the technologies that have applications across large parts of the economy. Started with the steam engine, electricity was another one, so was computing, so was the internet. The significance of this lies not just in the original invention, but the countless innovations that follow from it. I think it's reasonable to conclude that artificial intelligence is likely to be the next general purpose technology. And if so, the implications can be transformative. It has the potential to increase productivity in the economy, to accelerate scientific discovery, to improve healthcare, to enhance business processes, to create entirely new industries. History, though, does tell us that the economic benefits of major technologies don't arrive automatically or immediately. It does take time for these complementary investments and innovations to emerge. We're still in the early stages of understanding how AI will reshape our economy, but its potential is immense. So the challenge is not whether to embrace AI. We clearly should. The challenge is how to do it safely and effectively. And that requires serious engagement with several very important public policy questions. For example, there are growing concerns about the availability of computing power and energy infrastructure required to support AI development. As demand increases, and while that infrastructure is changing, choices may need to be made regarding priorities and resource allocation, forcing us to think about how we weigh the benefits of healthcare and defence, finance, entertainment, and many other uses. There are also complex legal questions. Consider the development of increasingly autonomous AI agents, capable of making decisions and acting on behalf of individuals or organisations. Traditional legal frameworks are based on relationships between principals and agents who each possess a legal personality. Well, AI systems don't neatly fit into those categories. So there are important questions of responsibility, accountability, and governance. These are not reasons to slow innovation, they're reasons to engage with these issues proactively. If regulation is reactive, uncertainty grows. If regulation is clear and purposeful, innovation flourishes. So finally, I want to address one specific dimension of AI that has become increasingly important: frontier AI and cybersecurity. Recent advances in frontier models have been extraordinarily rapid. These developments create exciting opportunities, but they also create new risks. One concern is the possibility that highly capable AI systems may become increasingly effective at identifying vulnerabilities in digital infrastructure. And that, of course, is not just in our world of finance, it's across the whole of the critical national infrastructure, for instance. And in a world where finance, payments, and communications are deeply interconnected, those risks are relevant not only to individual firms, but to financial stability itself. Addressing them requires collective action. First of all, we need stronger international coordination in the testing and evaluation of advanced AI models before they are widely deployed. The nature of these digital systems means that no country can address these questions alone. Second, organizations need significantly stronger resilience and recovery capabilities. Prevention will always matter, but we must always be prepared to recover quickly when incidents do occur. Now, I think the UK is very well placed to contribute in these areas. We benefit from world-class institutions, as the Chancellor was saying, including the AI Security Institute and the National Cyber Security Centre. And at the Bank of England, we're working closely with regulated firms to strengthen preparedness and resilience. But these issues are going to require our continuing attention, and actually our continuing very close attention. So let me conclude. Economic growth matters enormously. It matters because growth underpins rising living standards, it creates opportunities, it strengthens public finances, it improves resilience. The question is not whether regulation and growth can coexist, they must. Good regulation is not an alternative to growth. In many cases, it is one of the conditions that makes sustainable growth possible. The task we face is to regulate to achieve clear end objectives and to do so promptly. That means identifying those objectives, designing frameworks that support innovation and competition, being willing to adapt as technologies evolve, and maintaining the stability upon which prosperity ultimately depends. The UK has immense strengths: world-class institutions, an innovative financial sector, leading universities, a strong technology base, a tradition of openness to new ideas. If we combine those strengths with a clear focus on productivity, innovation, and effective regulation, I'm confident that we can build a stronger, more dynamic, and more prosperous economy. Thank you. So it's my pleasure to end with a toast. The toast is to the Lady Mayor and to the Mayoral Consort. The Lady Mayor and the Mayoral Consort.